Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock, with news of a sharp pullback in risk this morning. But first, US jobs growth is proving fairly resilient despite global headwinds. The non-farm payrolls report out on Saturday showed 151,000 new jobs were added in January, and their unemployment rate slipped to 4.9%. Their participation rate was unchanged. But more impressive is that wage growth has emerged, with this up 2.5% year on year. And given CPI inflation was just 0.7% in the past year, real wages are growing handily. However, surveyed consumers see inflation dipping. An increasingly important gauge of American inflation expectations slipped last month to its lowest level since the Federal Reserve in New York began to survey in mid-2013. Some see this as a warning bell for the Fed in Washington, especially as those surveyed see inflation at 2.4% in the coming year. Markets are worried this morning, however, with Wall Street down 2% in all the three indexes. They are following similar, even larger declines in Europe. A slower Asia is perhaps catching up on sentiment. But it is not slowing everywhere. India said GDP expanded 7.3% in last year's fourth quarter, and consumer and government spending lifted their economy. Such a rapid clip has put India ahead of China as the world's fastest growing major economy, at least according to official data. And there's some questions about that for India, as there are for China. Trader behaviour at Aussie banks in an asset investigation being carried on for ANZ is widening into a systemic probe. This is an investigation that probably won't end well for any of the four-pillar banks. Market chat screen conversations may be at the heart of the document trail, and it is reported these look ugly. In New York, the benchmark US Treasury 10-year yield has dropped sharply today to 1.78%. More ominous, CDS spreads have jumped sharply on Wall Street this morning, and are now at the highest level since August 2012. The US oil price is lower today. US price is now just over $30 a barrel, while Brent is just under $33.50 a barrel. The gold price, however, has had an eye-catching jump, up $36 this morning to $1,194 an ounce. And that is back to prices we saw in April last year. Maybe part of the jump can be ascribed to the low level of Chinese production of gold. And China's foreign exchange reserves have dropped by $100 billion again, to 3.2 trillion at the end of January. Their central bank said this on Sunday. These outflows are starting to become seriously regular, and stopping them may be as difficult as stopping a run on a bank. This is the cost of defending the yuan. New Zealand dollar is still pretty much unchanged from where we left it on Friday. Now at 66.4 US cents, 93.4 Aussie cents, and at 59.4 euro cents. The TWI starts today at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.